Thank you for coming today. I think we have a very interesting concept and discussion to talk about today about innovation and financial engineering in Islamic finance. It's a quite large topic and big topic, so I had to be very selective on what actually we can present in this short time. So basically we'll try to have some kind of introduction at the beginning and talk about innovation, types of innovations, and then we're going to give you some examples of how we can apply innovation and create new Islamic financial products, because I think ultimately this is what we need to get to, is how the process goes and how we can actually create new structures that actually can help Islamic finance move into, if you want, the second level. So let me start first with an introduction about the importance of product development. It's very clear now that we are living in a very fast and changing world. We have seen a lot of companies raise very fast and go down very fast. And we have a lot of examples from technology to different types of manufacturing companies who actually could not survive because the world is changing very fast. And banking is changing also very fast. And if we can't cope with that as an Islamic finance or as an Islamic bank, then we also cannot survive. This is the new challenge we are facing. Now, to do that, you have to be innovative. You have to create. You have to continually create new products. You have to continually be innovative, and you have to produce the right products for the right time for the people. Now, we know that the behavior of people is changing constantly. Usually, and for the last, I think, 300 years, you, as a customer or individual, will go for your bank. You'll actually try to find the bank. You find your location, best price, best everything. But now, actually, things are changing. Now, the bank has to come to you. Now the bank is on your mobile, is on your laptop. You can buy your products at night from your sofa, before you go to bed. It's no longer that the customer has to go to the branch. This is the reality, and we have to face it, and we have to change. And if we don't, then we're not going to survive for the next 10 years, because in the next 10 years, everything's going to change again. And this is where the challenge lies. Now, how we can do that in terms of technology, in terms of Islamic products, how we can actually create this new generation of products is also a big challenge for all of us. Now, of course, there is simple facts that we have to take into account when we talk about product development. And product development and financial engineering, for me, is very interrelated. And we're going to talk about this in a bit. But there's critical success factors that we have to take into account when we look into any product development process. The first thing is you have to have a clear strategy. What exactly you want to do and how we want to do it. This is very important, because without having a clear strategy, and I'm talking about a clear strategy for the product development itself, which has to be in line with the strategy of the bank. And if you don't have a strategy that actually covers the product, then you're basically going into a dark road. You have to have a strategy, a clear strategy, and make it clear to the team, whoever actually do the product development, which is a specific, each department is doing the product development, or you have a product development team, that they have to have a clear strategy on what we want to do in the next 5 years at least. Because without that, you will be always reacting to the market. And we're going to talk about reactive strategy a little bit later. So having a clear strategy is critical to be able to understand what actually you want to do and how you want to do it. Of course, after you have the strategy, you have to talk about the planning. So planning is also important. So the planning and execution is also important, because time to market, how we're going to conduct the product execution or development is also critical. Without planning, you will not be able even to execute your strategy. Market research, it's always the problem. When you go, and I'm talking about practicality, I'm not talking about the theory of it. When you go to any bank, it's very little market research. If you go actually to see what market research has been done for each product being developed, you will see very little evidence that actually there is any proper market research has been conducted to do the product development. And this is basically because of usually the cost. But if we're gonna plan the future, if we're gonna have to change because everything is changing in front of us, then we have to do, we have to spend some money to do the product development. We have to spend some money to do the market research. It's not an option. It is a must, because without that, we will never be able to cope. It all depends now on how we plan our next 10 years, how we are planning to change, how we are planning to cope with the changing things around us. And without that, I'm sorry, but it's going to be very difficult. You're going to be always reactive. You're going to be always seeing what other people is doing and try to copy that. And we're going to talk about that. And this is not helping so far. We have seen Islamic banking developing, but all the time is just replicating and copying what other people is doing. And so far is not convincing for the people, for the consumer, the target customers that actually we're looking for. It's still not, it's not convincing that we are actually offering something different. So market research is essential to actually, and a critical success factor for product development. Innovative products feature. Now I'm going to talk about this at the end and following, because this is actually the critical part. We can have all the critical success factor, but if we cannot bring a new innovative product to the market, then we're not able to cope again. Because you can do all the research, you can come up, and then if your research says, actually, yes, I have to do this very much similar to like everybody else is doing, then you actually did not do anything new. It has to have something new. It has to have an added value. And there's different type of innovation. It doesn't have to be, completely new. It has to add a new addition, has to bring a new value to the consumer. Now, of course, all this needs resources. You need budget. You need actually equipped or developed individuals who actually can do the product development and can implement it and can drive it through the institution. So availability of resources is very important to make sure that's actually the process actually completed on time and on achieving the right requirement. Now, of course, again, management commitment is always required, because without the management commitment, you're not going to have the resources, you're not going to have the budget, and actually the whole process is not going to go through. So the buy-in from the management, the top management, has to be there. Without it, it's going to be very difficult to pave the way for the whole team actually to come up with innovative solution. And you have to be patient, because coming with a new product, innovative product, is a difficult process. It's never easy. And specifically for Islamic finance, because the whole concept is new. And getting a new product within this new challenging environment is very difficult. Time to market. Now, of course, when you start developing a new things, if you don't go to the market first, then somebody else will do it. And how many times we have seen that? You have an idea, you think about it, you try to do it, you start slowly, you're doing some here, some work here, some work here, some work here, and before you know it, somebody else already in the market doing the same idea you have thought about like 2 years ago. So time to market is very critical. When you set to do something, put the plan and go ahead and execute it before somebody else do that. Because if you don't go out to the market first, then you lose your competitive advantage. Now, innovation is the real part here. How we can achieve that, how we can create innovative products. Now, we have two different types of innovation. It can be simple modification, and this is a set of activity leading to minor modification or adaptation of an existing product. So you can be innovative by changing a little bit of an existing product, bring an additional feature. You know, very, very much simple example. What's the difference between iPhone 5 and iPhone 6 and iPhone 7, right? Samsung Galaxy 6 or 7 or 8. They are very much the same. But each time you edge a little bit more, you increase a little bit more, you improve on your process. Don't have a product for the last 10 years, which is the same product, and you haven't changed it at all. This is not how it's going now. You have to change, you have to create, you have to add a little bit of value, you have to bring it to the market. You have to tell people that actually we are changing, we're moving forward. And this doesn't have to be radical. It can be very little small change you bring to the market, which actually your customer will like. And this is usually can be depending on the feedback from the customer. I would like, if you have actually proper, and we have this all the time, you go to the branch and you have a feedback form or you have it on your website, but actually who looks at that? Does anybody actually look at that from the bank and properly actually taking it through the proper channel to see actually the feedback from the customer, the things they really need and the things they really want to change in the bank is actually being seen by somebody and actually followed up? Nobody does that. I haven't seen actually a bank I worked with, as a consultant for so many banks, and actually nobody does that. They have the box, yes, they have the forms, and maybe somebody actually look at it, but actually it never actually goes anywhere. And this is how simple modification can actually bring value to the customer. You start from this point. It's very simple, very straightforward. And somebody actually can give you an idea. Say, yes, actually, that makes sense. Let's do it. Let's make it more comfortable to the customer. Yeah? Let's make it more appealing to the customer. And this is very simple. But unfortunately, we don't do it. Very simple thing. And this is usually with a reactive product development strategy. So you look what other people usually doing, and you try to copy the same. So you open a new bank, you open a new branch, okay, let's see what's in the market. And this is very typical in Islamic banking. So you look at, usually they don't look at the conventional banks anymore now, they look at the Islamic banks, and you copy what other Islamic banks are doing. But those other Islamic banks are actually copied from conventional banks, what they are doing. So you end up copying what everybody is doing, and nobody actually trying to improve on the existing products and services. And we end up with very much the same product across all the banks. And you can't see any difference. Maybe the only difference will be a little bit, of price difference here or a little bit of price difference here, which makes no sense even on the saving side. Maybe it makes sense a little bit on a finance product. But on a saving, product, if a bank tells me that actually your expected profit is 3%, and the other bank is 3.1, and actually I have, let's say, 100,000, what's going to give me? 100 at the end of the month different, or at the end of the year? It's not going to make any difference. Why should I change from one bank to another bank for 100 that actually I might have to pay for traffic or transportation between the bank and coming back? So if you want to differentiate yourself, even within the Islamic banking sector, then you have to come up with something different. This is very important. Now, of course, the other approach is to have a radical innovation. You bring something that actually doesn't exist in the market. Now, this is very critical because this is where you actually attract the people. Here where you actually come and you have a statement to say, that's actually, I am doing something different. I am bringing a new product. Now, again, we're going to talk about similarity with conventional products because when we design a product, you design it for a need. We are in service business. Banking is a service industry. And every time you provide a service, you actually having a need to fulfill. And that's why we need market research, because in market research, you identify the customer needs. And customer needs are changing. But overall, the essential one, the really essential one, what do you need as a customer? I need to have a house, I need to buy a car, I need to have a saving account. These are the essential needs from a banking service. So when you design a product, you actually design it to fulfill this need. So for the customer, at the end of the day, it's very much the same. When I buy a car from an Islamic bank, or buy a car, or actually finance a car from a conventional bank on a loan, for me, the outcome, how it looks, is very much the same. Because In the Islamic, you go to the bank, sign a couple of papers, and you go home with the car, and you pay monthly payment. In the conventional, you go to the bank, sign a couple of papers, and you go home with the car, and you pay monthly payment. For the customer, it's almost the same because you have designed, and we have designed the product to fulfill that need. So for him, it's very much the same. It looks the same. What we know, that's the difference is in the contract, in the process, in the risk, the bank. But the customer doesn't know that. And why he doesn't know that? Because nobody has explained it to him. He's not coming here to a conference to understand how Islamic financial innovation is. He's going to be there at your branch. And at that time, when he goes for the first time to the branch, has anyone actually explained it to him properly? And if that doesn't happen, then his understanding and his feeling is going to be very much the same as if he's going into a conventional bank. And this is actually our main problem in terms of understanding and awareness for the customers. When the customer comes for the first time for your branch, has he felt different? Did he actually receive different information or complete information? Is your staff equipped properly with the knowledge and expertise to explain the product properly? Have you trained them properly to do that? I have a meeting 3 weeks ago with the top management of a fully fledged Islamic bank. And I was talking about a new product on Mudaraba basis. And I kept talking and talking, and I'm very excited about the product. I'm going to talk about it later today. But the faces of the top management, it seems like, either they know the product very well, or actually they never heard about Mudaraba, which turned to be the later. They actually they heard about Mudaraba, but they don't know what I'm talking about. So it's actually very interesting to see actually on the top management. So if the top management there, and then I had a session with some of the business relationship managers with the bank, and they couldn't properly explain anything, even give a definition of murabaha. What is murabaha? And if a relationship manager who is actually going out to bring new businesses and convince businessmen to come and open an account with a bank or take a finance from the bank, if he can't explain a murabaha product or a definition of murabaha, how can he bring a new client? How can the client understand that actually Islamic banking is offering a different product? There is no understanding within our staff to be able actually to explain to the customers. And this is one of the biggest problems that you have to look in internally. So radical innovation means that actually you create a completely new service or product from scratch, which is, of course, a riskier approach. But this usually comes with a proactive product development approach. So either you are reactive to the market, you see what everybody is doing and you do the same, or you actually become a proactive in the product development and you actually try to bring something new. But to do that, you have to have all the critical success factors we talked about earlier. But innovation, again, in Islamic finance is very difficult because there is critical things that we have to look at. You have to get the balance right between the Sharia compliance, which is a very difficult thing to meet and actually to do, having looked at things all the time from a conventional point of view and how easy it is actually to come up with a product in a conventional way and just do it and implement it directly. And then you find out that actually there is so many rules in Sharia that you have to fulfill before you actually manage to create the new product. And then you have the regulation. You have to meet the regulation, and sometimes if you are in a hostile environment, that's actually they don't allow Islamic banking. Sometimes they don't allow bank to own the goods or to own the property. Then this creates a problem. How I'm going to do that without actually owning the assets when everything is related to an asset in Islamic finance? And of course, it has to be commercial viable for you as a bank and for the customer. So all this has to be struck in a new product that actually can grab the market. So all this together is actually a huge challenge. You have to meet every time you think about product development. And of course, it will be more challenging when you think even about bringing a completely new product that doesn't even exist in the market at the moment. And now, of course, as we talked about it earlier, Islamic banks, Islamic financial products are very much the same because we design them in the same way as to fulfill the service. And that's why for the consumer, they almost look the same. And if we can't actually explain it properly to the customer will not be able to offer or understand the difference. So the awareness issue, which everybody actually always complain about, that's actually there is a lack of awareness in the market, the lack of awareness of the market. And I think the problem actually starts from home. If we can't have awareness within our staff, if our staff can't explain the products and can't explain what is Islamic finance, then how we can expect that everybody else or anybody in the market or in the street or the government even should have the responsibility to do that? We have to resolve the issue from our own house. And as I was saying just a minute ago, that any customer comes to the branch for the first time for an Islamic bank, you have almost 30 seconds to show him the difference. If you don't do that within the first 30 seconds from the customer who's coming actually to your branch, then you lose the customer and you lost him for good. He's no longer going to be convinced about Islamic banking. He's no longer going to be convinced that this is different. What he will be looking for is actually a good service and a good price. If it's offered to him from an Islamic bank, then he will buy it. If it's offered to him from a conventional bank, then he will buy it. And that's because we lost him. He was interested, he was coming to our branch, and if we couldn't actually struck the difference within the first 30 seconds, then we lost the customer. Now, we know that we have a core customers in every society or in every community or in every Islamic country, if you want, or a Muslim country. You have 20% of the population who actually will go to Islamic banking. Now, regardless if you are good, if you're not good, if you are, because it's Islamic and they believe it's the right way, and then they go for it. And you have another 10% at the end of the spectrum who actually, we can call them the radical Muslims. And these guys, they will actually never believe that this is Islamic. Whatever we do, whatever we try to explain to them that this is actually Islamic banking, they say, no, it wasn't at the time of the Prophet, so I'm not going to buy it. So that's simple. And these are representing 10% of the community. And you have in between, you have 70% in between. And these people who actually will be interested if you only offer the right product and the right price. Now, they might not like or be indifferent about Islamic or conventional, but if it's the same price and the same service, then he will prefer the Islamic, because it gives him a little bit of, clear conscience, if you want, right? But if it's a little bit more expensive, then he will go and flip to the conventional side. Now, our problems usually within the Islamic banks, within our strategies, is all our strategy focusing on the first 20%. Nobody actually focus about the 70%, which means that actually you have to top up your game. You have to be offering very good service and very good price. And instead of everybody, all the Islamic banks actually fighting for the 20%, you start talking about this 90% of the market. But no, we actually were selling Islamic banking. We want to be different, and this is how we show. We're actually selling Islamic banking. We're not selling the service. We're not selling the product itself. And that's why we keep focusing on the 20% of the market rather than on the 90% of the market. Because when you go and say, this is my product, this is my price, this is my service, rather than this is my Islamic bank, then you are different. You are actually talking to 90% of the market. And when you say, this is the product, this is the features of the product, this is the price, and everybody will be interested, whether a Muslim, non-Muslim, a Christian, Jew, wherever he is, if he believes in Islamic banking or not, for him it will become a product that actually you're offering to him. It's no longer Islamic banking that you're selling. You are selling a service. And this is what we should be doing. We should be focusing on how we move on from actually presenting ourselves as an Islamic bank to actually presenting my products and services. And to do that, you have to be able to be innovative. You have to differentiate yourself in the market and compete for the right reasons and in the right market. Now, I understand that you have, yesterday, they've been talking about the reverse engineering and the innovative engineering. And this is the two ways, basically, the Islamic banking products are currently being developed. So either we look at what's in the market and try to see actually how the process goes and try to replicate that, and that's what we call reverse engineering. Or we actually think, all right, what's actually the gap in the market? What's there is missing there? What I need to do? And start thinking from scratch, how can I create a product that's actually fulfill this need or service in the market that actually doesn't exist? Now, I know that is very difficult to come up with something new in the banking sector, because banking has been there for 300-400 years now. And the typical services or the essential services that actually needed has been fulfilled by conventional. And I'm not saying that we have to come up with something that is completely different from the conventional. I'm saying is that it has to be at least different within the Islamic. You bring a solution for the Islamic banking that doesn't exist, and we have a lot of shortage. We have a lot of shortage, and everybody complaining about that. We have a lot of shortage in products in Islamic banking. So we start from there. And with there, we have to make sure that we actually focus on the features of the products that we want to bring in. So that the products will be different from what the conventional market. And that's different has to be explained to the customer. It has to be relayed to the customer. We have to tell the customer why we are different and how this product is different from the conventional banking. Now, of course, based on the way you use engineering, then you have different types of products at the moment. So the first one we have this what we call pseudo-Islamic products, and this is very much is a product replicating exactly the same function and replicating exactly the same outcome of a conventional product. And this is really usually, as we can see, the tawarruk product or the basic murabaha product, which actually comes up with an ultimate solution that's actually replicate the conventional product. And it's, you know, it's always amazing usually to think how the bank thinks all the time. Now, why, if you look at Islamic banking, almost 90% of the transactions are based on murabaha and tawarruk. And in some banks, actually, 97% is based on tawarruk. And the simple fact is that in tawarruk or murabaha, the Islamic part takes about maybe 1 minute to complete. So when you are buying or selling a commodity, right, it takes about 1 minute, 2 minutes, 1 hour to complete the transaction. And this is between a buyer and a seller. But the minute that transaction is completed, the relationship between the bank and the client change from seller and buyer to a creditor and a debtor. So basically, you change from buying and selling to a credit relationship immediately. And that's why banks prefer it, because the minute the Islamic part finish, what left is just a normal debt. And they know how to deal with debt. That's what they do. That's what banks do. So I have a debt on the customer, then I know how to collect, I know how to follow up, I know everything, I know the risk associated with that, I take a security. So everything else is fine. So as long as I can deal with this, 10 minutes or 15 minutes of Islamic part, then I'm out of it, and then everything become, till the end of the transaction, is just business as normal as in a conventional bank. And this is the real problem we're facing. Now, what we call Sharia compliant products, and these are products that's actually designed based on the Islamic principles using a process, and actually it has some risk. And this is what we can call the majority of the products in the market actually fall in terms of ijara, the mudaraba, the musharaka, everything that falls within these. And we call them Sharia compliant products because they actually fulfill the requirement of the Sharia. But if you want to go to an innovative engineering method, then you can come up with a Sharia-based product. And the Sharia-based product, basically, it's a higher level. It's the second level, if you want, of Islamic financial products. And these are designed to satisfy the form and the substance of the Islamic finance and contribute positively to achieving maqasid al-Sharia. Now, maqasid al-Sharia, and always, you go to so many conferences, everybody's talking about maqasid al-Sharia, and we have to achieve maqasid al-Sharia, we have to achieve the objective of Sharia, but actually nobody tells you how. right? So you go to so many conferences, so many people talking about maqasid al-sharia, so many papers in the market and online. And everybody talks, yes, we have to achieve maqasid al-sharia, you have to achieve maqasid al-sharia. Yes, but then how will we actually do that in a banking? Yeah, how can I, as a banker, right? How can I achieve maqasid al-sharia? Nobody tells you that. And it's all start with the product. If you want to achieve maqasid al-sharia as a bank, then your product has to be designed to achieve maqasid al-sharia. Now, I was thinking about this all the time for the last maybe 5 years. And I had, simple ideas on how we can actually start thinking about this process. And of course, it's just a starting point. And of course, it can be developed further. But the main things we have to think about when we actually design the product is that should be in line with essential. And just to explain the difference between essential maqasid and desirable maqasid. Now, essential maqasid, for example, everybody should have a house. This is essential. That's everybody should have a house. Now, that's the essential maqasid. Desirable, if you think that's actually, yes, I am good, I'm wealthy, I want to have a villa rather than just a house or a flat, right? So having a house, having a roof on the top of your head is an essential part of the maqasid. That's everybody, the society has to work to achieve that. But actually owning a villa, a big house, is a desirable. So if you can afford it, then yes, we can do that. Now take this thing, this small item, and think about your existing products now. How many of your products actually has been designed to achieve the essential maqasid? Have your product says actually in anywhere that's actually if someone, let's say, wants to buy a house or to finance a house worth $10,000, for example, do you have a product for that? Or you actually, most of the products will say the minimum amount is $100,000 and you should have a minimum salary of that. And you should have, we designed the product, we put the conditions, actually always to go for the desirable. You never, as a bank, look at developing the product to achieve the essential, to make sure that's actually you target everybody. You target always the elite. You target always the people who actually have enough income to pay the finance, which is the essential part of the banking. I know that, but then if you're doing that, you're not actually achieving anything in maqasid al-sharia because you're targeting your profit only and you're not contributing anything to the society. And when we design a product only to generate profit, we end up with all the toxic products that actually has created the crisis in 2007 and 2008, because this is how financial engineering works. You design a product, you work to achieve profit without thinking of the consequences. And when you do that, when you design a product thinking only about making profit, you're never going to achieve anything. We're going to always be in the same cycle. And it's very simple. It's very simple. All what you need to do is to make a variation. You have two products available. One for what we maybe consider as the lower end of the community, who actually need that more than the rich guy who actually can buy a house on his own, but he needs a villa, so he needs the finance. But you have to have that product for these guys. And you might actually find more income from these guys than actually the rich person. So this is very important. And then you look at the concept selection process. Should include benefit and risk analysis. Now, I don't know how many of you has been worked in product development. But the reality is, I have never seen a product development document that actually talks about the risks related to the customer. What is going to happen to the customer if he actually buys this product? What legal risk he has, what credit risk he has. A lot of regulation being put recently, even in Europe. Actually, to look at this, you have to make disclaimer to the client. That's, if you don't pay on time, for example, on the mortgage product, they will have a disclaimer saying that if you don't pay on time, your house will be at risk. So you might actually lose your house. But when you develop the product, is there any actually analysis that actually tells you, as a manager in a bank, what will happen to the customer if he take that product? Not obviously the end result that if he doesn't pay. No, but there is risk associated in legal terms, in a payment terms, in his life, what impact this product actually will bring to the guy and what risk this has to bring to him. And if we don't look at these things, then we're actually not looking into the right things. We're not looking at the right proper things. And we have to think also about the society. What contribution, when I bring this new product, is actually going to bring to society? Or are we always thinking about what benefit this product going to bring to the shareholders? And if we're doing that, then we are not achieving maqasid al-sharia. We are just another institution working like a business. And we're forgetting about maqasid al-sharia. The feature and the nature of the product should be designed to achieve both essential and desirable. So as we said, it's easy, it can be done. You just have to think about how can I make sure that actually this product can allow people to buy the small thing and to buy the big things if they want. And you can put your conditions. There's no problem of taking security, put conditions, but just make it available. Make it available for people who actually needs it to be there. Don't target a segment of the community that's actually most likely doesn't really need these things, right? You have to bring it to the people who actually need it first, and then we go, because that's how it's maqasid al-sharia. We have to take care of the essential and then the desirable. Legal agreement should be fair and non-biased. Because we work on the Sharia compliance side also. And when we go and talk to the lawyers, and it's amazing how much they put conditions on the contract, on the legal contract. It's make it impossible for a customer to sign, actually, if he understands what he's signing. Nobody reads. But if any customer understands what he's signing in, nobody actually would like to buy this product because there's so many things you put on him that's become really biased at the end of the day. And we have to be fair. We have to make it fair. And this is the soul of Islamic finance. This is how we are different, is that our products should be fair, and that's in line with the Sharia requirements. Now, the benefit and risk analysis should be presented to Sharia. Now, most of the problem, and this is again part of the issue, that's our scholars who actually sits on the board and approve the Sharia products, they actually don't ask for more things from the bank. This analysis that we talked about the benefit and the risk, and what we actually bringing to the community, what risk we're bringing to the customer, and what additional value we're bringing to the community, has to be part of the approval process that the scholar has to bring. Now, this is just a few ideas about how we can try to achieve maqasid al-sharia through product development. If you can do that in your institution, or at least start working that, then the way you think, the way the business work, the efficiency of the business will be different, because you are thinking in a different way. You are thinking about now not only maximizing the profit of the bank, but also trying to do that while benefiting the consumer and the society at the same time. And this is really the trick. This is where you have to add these additional things. And of course, on the Sharia audit at the end, after the implementation of the product, part of the Sharia audit should report back to the management whether this product actually achieved what was designed for. Are we going to check after we launch? Because always you check after you launch, actually, are you making the right profit? Are we getting the same customers as expected in the financial plan? You check that always, but also we have to check whether we're actually achieving the maqasid that we talked about when we designed the product. So this should be part of the Sharia audit. This is very simple steps that can be done in a simple scale, even within any institution, to try to add value to the products we design. Now, this is the simple product development, or the standard product development process that actually can be implemented in any bank. And part of this is basically talking about how we bring everything together. How can I design a product using a product development process that actually adds the financial engineering element and achieving maqasid al-sharia at the same time by adopting a modified, if you want, a modified product development process. Now, as I said initially, maqasid al-sharia, the product development and financial engineering are very much similar and interrelated. While if you look at the textbooks for financial engineering, you're going to only see formulas and talking about derivatives and everything, and you actually never think that there will be a link between something called financial engineering and Islamic finance. And while I'm doing my PhD, actually, I looked at so many books about financial engineering. And it was amazing because nothing actually talks except of how you can use mathematical formulas and to design product. Until I came across someone talking about project financing and financial engineering. And this is where it's actually I created the links, because when we talk about a project, then there is something that actually you're really designing. It's not just formulas in the air that actually create some mathematical equation to create profit somewhere. No, when we talk about project financing, then you're talking about financial engineering. There is an asset, there is a project that you need to finance, there is a way to finance that, and how this best way to finance it is the engineering bit. But from my point of view, every financial product in Islamic banking is a project for financial engineering, because we are different. The way we operate is different. The things we need to look at is different. And as we said before, you have to look at the Sharia requirement, you have to look at the regulatory requirement, and you have to find out the viability, the commercial viability for the institution. So every single product we do in Islamic finance is a project for financial engineering. So while this is the standard product development, you look at the concept, you look at the product definition, and then implementation and launch and post-launch monitoring. Now, financial engineering always comes into the first two stages, because whatever you do, even if you're doing a conventional financial engineering, you're actually talking about a concept and a product definition. But then you have to implement whatever you design, you have to implement. So the three stages at the end, implementation and launch and post-launch monitoring, that applies for any product. So technically, if you want to incorporate financial engineering within the normal product development steps, then first we have to identify the parties' need of the transaction. It's very important that we establish what is exactly we're looking for. What are the needs? What are the needs for the bank? What are the needs for the customer? And try to establish that need. Without establishing the need, the concept and the design will be wrong. And then we need to identify the underlying asset. Every time we design an Islamic product or a financial product for Islamic banks, then we have to look at the actual transaction and the underlying asset. What is exactly we're buying or selling, what we're actually transferring. And then we have to do full analysis of the cash flow to make sure that actually we understand how is the money going to come, how is the money going to go, and try to replicate that within the assets requirement. And then choose the most appropriate Islamic mode of finance. Now, this is very critical, and this is where the essential knowledge of Sharia and Islamic banks comes in. Because you can always think about the cash flow and say, yes, I can do that with tawarruq. It's the easiest way. You always can achieve that. It's the simple, straightforward. Whatever you want, you can achieve in tawarruq. It's simple, and that's why, when you go and talk about product development, and I see so many people trying to do product development, and they say, this is the feature of the product, this is and then what's use the principle? We can do tawarruq. Of course you can do tawarruq. Everybody can do tawarruq. But that's why it's easy. That's why everybody is doing it, right? But the question is, if I don't want to do tawarruq, and this is the trend now, and you have to see this is coming. In Oman, they launched Islamic banking in 2012. It wasn't actually allowed in the country before. Or not allowed, but it wasn't regulated for. And when they came in with the regulation in 2012, they prohibited the bank from actually doing tawarruq. So in Oman, there is no actually tawarruq. And there is no tawarruq-like, so you can't actually provide cash to the client whatsoever in any way or form. In Morocco now, they're actually setting up the regulation for Islamic banking. And they actually doesn't allow tawarruq. Now we're working now with the government, with the Central Bank of Morocco, for the new regulation. And they won't allow tawarruq. So we have to come up with a new innovative ideas. So no tawarruq, no cash generating facility to the customers at the end. In Indonesia, the same. They restricted very much. And this is going to happen. Tawarruq in the next 5 to 7 years, maybe max 10 years, is going to disappear. So you proper start thinking now about what you're going to do when tawarruq is no longer exist and no longer approved. And this, I'm talking not scholar, I'm talking about governments. Governments in Oman, in Morocco, in Indonesia doesn't allow this. And this is going to happen very fast. You're going to see all the other Muslim countries who has Islamic banking, they're going to come and say the same. There is no more tawarruk, because if you want to be seen as a different, if you are saying that we are different as to the conventional banks, then your products has to be different. And that's tawarruk has to go. And it's just a matter of time before tawarruk disappear. So if you're thinking about the future, you start thinking, it will disappear. No, it will disappear. It's just a matter of time. So the one who actually feeling comfortable now in their zone with their products, then they should be alerted for this. So this is for the concept development side. Now, if you want to talk about the product definition, then we have to talk about the full understanding of the risk return of the transaction. So we have to have a proper analysis of what's going to happen to the bank, what's going to happen to the customer, using the identified assets. So this is very much important. And then we have to investigate the possibility of adding, of course, a credit enhancement tool. So if we need to take a security, if we need to improve on the transaction, how we do that, how we take the security, what type of security allowed under this structure. And this is very important, because the minute you go into a mudaraba or a musharaka structure, your normal security things doesn't work anymore. Yeah? So I can provide finance to a client, let's say on a business finance, and we're going to talk about an overdraft solution. If I'm providing an overdraft solution based on mudaraba to a client, and I take his property, for example, business property as an asset, and he make a loss, and that loss was genuine, I can't do anything with the asset, because I'm not allowed. I have to take the risk of losses. I am only allowed to execute on the security if he was negligent or he did a fraud against the bank. Then I am allowed to take the security. So taking the security per se will no longer help in securing the assets. You have to think about different controls that we have to put within the product to make sure that actually we protect the bank from any potential losses. So this is basically, if you want, the theory behind everything. Now I want to give you some examples of what we have done in the past few years to make a change, to bring something different to the market that actually doesn't exist, and how we actually created these products. Now the first one we're going to talk about is the business overdraft. Now business overdraft usually, and I've seen so many clients, the business overdraft is very basic requirement for any client. You go to any business and you tell him, would you like to have an overdraft? Very rarely they will say no, because it's a very basic requirement. Now, how can we do that without actually using tawarruk, yeah, or murabaha, where it's a fixed price, yeah, and fixed rate? We used it. We developed this product based on a mudaraba solution. Now, this is the trick here. How can you use mudaraba with the normal issues that we know about, which is moral hazard? With the mudaraba, when anybody knows that the bank is actually paying the money on a mudaraba basis, every fraud person will come to you and say, okay, give me the money. I will be happy to invest it for you, right? Nobody actually give you any proper accounts anymore, right? So they actually always play with the accounts. You don't know if they're making a profit or not making profit. So you have this hazard. Then you have the agency problem. Now, because it's not longer the money of the client, it's the money of the bank, then he can take more risks, unnecessary risks sometimes, and uninformed decisions. So their way of moving and operating will be different when they know that actually they're operating with other people's money. Similarly, you have adverse selection. When we're talking about profit sharing and without the client actually understanding how the bank is actually operating, say, okay, I want to be your partner, I want to have a share of your profit, then he will run away if he's a profitable business. Why should I share the profit with you? This is the concept on the mind of the people. So you think, why should I share the profit with you? And the guy who thinks that actually he's going to lose, then he's going to come to you and say, okay, maybe we'll try this. This is a risky business. Why should I try it with my money? I can take the bank's money and try this business. And that's where you get the adverse selection. Only the people who think that actually might lose, they will come to you. So these are the normal challenges we're facing on the mudaraba side. When a bank wants to decide to use mudaraba, they will be always facing these issues. And these issues has to be handled with any product, financing product using mudaraba. And this is what we actually done. We created a mudaraba solution that's actually Sharia compliant, comply with a waiver requirement, where it's flexible. You create a facility to the customer and say, this is your mudaraba capital. This is our mudaraba capital. And you can take out and take back whenever you want. It's very much as a function, as a cash flow, will function as the conventional overdraft. So you create a facility for him, say, this is 100,000, and this 100,000, it's for you there. You can use it whenever you want on a daily basis. So he can take 50,000 for 5 days and return it. And then he takes 60,000 for a week and return it. And then he takes the 100,000 completely for a month and return it. There is no restriction on him. He can take money and return it whenever he wants as the business requirement. Every time he takes money, we're going to account for that. So it gives him the flexibility he needs. It gives him the things that he wants to need. And of course, we need to handle the issues that actually part of the mudaraba, how we can protect ourselves. So we created additional controls that actually to manage the risk within the mudaraba. At the end result, you have an efficient product that's actually give you very low cost, transactional cost, and provide the customer with the basic need they need, which doesn't exist at the moment in most of the markets. Very much simple. The client and the bank agree on a profit-sharing ratio and expected profit rate. And for this product, you need to think very much similar to what you have on your saving account, the mudaraba saving account. We actually just exchange the role. Whatever we do on the mudaraba, we do it the same way. So if a customer coming to you and depositing money for 5 days and then taking it out, and then depositing 100,000 and taking it out, you calculate the profit for him, right? Because every time he put the money, you invest the money within your pool. And we said, okay, let's do the same with the client. Every time he take out money, he's investing in his business. So the rate of return from his business will be my rate of return to my investment with him. So this is the way we calculate the client transaction. So the client agree with the bank on the profit sharing ratio. The client can use the bank funds, which is the mudaraba capital, as and when required, subject to the agreed limit. The bank send a monthly statement. At the end of the month, you send a monthly statement to the client. You tell him that you used 100,000 for 5 days, from this date to this date. You used 30,000 from this date to this date. You used 40,000. Just a normal statement. You send it at the end of the month. And you say to him, according to our agreed expected profit rate, I need you to pay an advance profit payment, right, at the end. So he can pay advance profit payment. So we don't have to wait until the end of the year. So I can collect the cash from him immediately at the end of each month. So we basically generate a monthly income to the bank based on the usage of the client. If he didn't use the facility, then he doesn't have to pay. If he used the facility, then he pay advance profit. The clients make the monthly advance profit payment on the relevant payment dates, and the client sends a quarterly management account. Now, this is the additional thing we created within this. We will ask the client on a quarterly basis to send us 5 figures, which is related to the total sales, the cost of sales, and the margin of the gross profit margin, plus how much his actual current asset is on that quarter. So 4 figures. He needs to send it. He can send it by email. He can send it by fax. And these we monitor on a quarterly basis. Because in a mudaraba, we're actually investing in the client. And I need to monitor him. And the monitoring system we have created, it's actually add value to the bank. Because now you are seeing what he's doing on a regular basis. And if you see profitability is going down, then you can pull out immediately from the transaction. And we did a very simple Excel sheet for these ratios to monitor the profitability on a quarterly basis. So it will take a staff from the credit admin department about 3 minutes to monitor the client, just to key in these figures on a quarterly basis. So 12 minutes a year of monitoring the client will enhance the risk profile of this product immensely. Now, what is the controls we created? First one is strict eligibility criteria. Now, we designed this product and we sell it actually now, and we're working with the World Bank IFC on one of the projects actually. We actually implementing this product in a Saudi bank for the first time in Saudi. So this product is being implemented now with the support of the World Bank. Now, we have to go, and this is for the SMEs because this is now the new, if you want, the new big thing in the market. That's how can Islamic banks actually support SMEs? And we said, okay, let's start for the first year for the medium size. So medium-sized company, top end of the level, not corporate but medium, but they will have proper accountancy system. They will have at least an accountancy department who actually calculate financial management accounts on a monthly basis, and they have reporting. So we have to be strict at the beginning. So we understand how we to implement the product, how we monitor it properly, and then as we go forward, we can increase the size and we go to smaller businesses. But strict eligibility criteria at the beginning, high profit businesses, good customers already exist. Start with the one actually already exists at your end. That's actually you can help them. Ongoing monitoring by this quarterly account. Stream of monthly income. Every month you will receive income on advance payment, so you don't have to wait. We do the mudaraba period for a full year. So by the end of the year, when the client finishes his accounts, he will send us the final accounts, and we do the final calculation. But we don't have to wait for the year end to actually to get the profit. We can get profit on a monthly basis. Control to reduce potential losses. Now this is where things start to get a little bit more interesting. Now, in a mudaraba basis, how can I actually control the client not to make losses? First of all, we say we will share our profit from the gross profit margin, not from the net margin. So when we say gross profit, means that cost, total sales, right, or total revenue, minus the cost of sales. This is very interesting because you will find, specifically in business, that a gross margin usually, in a normal business, it will be 20% as a minimum, right? Which is very interesting. Now, net margin, after deducting all the administration costs, rent, staff cost, everything, then that will reduce to 5%, 10%, 12%, whatever it is. So making your profit loss sharing arrangement for mudaraba from the gross profit margin means that I don't have to take the administration cost into account. And this is very important, which means that, and this is the usual trick from the clients when they actually go into a mudaraba transaction, he no longer can increase his salary or his staff salary or the administration cost salary to actually end up with the losses. So we say that we share our profit from the gross margin. That's the first thing. The second thing, he's not allowed to sell his goods and services below the cost unless he can go back to the bank and get a permission. So when I create these two conditions on him, that's our profit margin, our share of profit is going to be from the gross profit, and he's not allowed to sell below the cost, which means that he will never make a loss on the gross profit unless he actually did not fulfill the conditions of the contract. And if he doesn't fulfill the conditions of the contract, he will become liable for any losses. So very simple thinking of how we can control the client, which you can add it to the contract, which make this product then actually a very good product for financing, because you no longer allow the customer to cheat you or try to take out some of your money. And then if he cheats, if he actually sell below the cost or make a losses, then he become liable. And this is where the security element can come in, and then you can ask him to pay, and it will become very much like any other product. So the profit calculation, also we have from the gross profit we talked about, and the final calculation. Now, we usually say, and I don't know how is it implemented in Turkey, but you have on the saving account, on your saving account, you will have a profit sharing, yeah, maybe 60, 40, 70, 30, or wherever it is you have agreed with the client, and then you have an expected profit rate. So you pay 2% or 3%. Now, anything over that, Usually, according to UEFI, you have a profit reserve account. That you deduct from the profit and put on the profit reserve account. Sorry, to smooth the mudaraba payment profit. Now, we used very much the same thing. And we said to the client, okay, now let's say the client company is worth $1 million, right? And I give him 100,000 overdraft facility. So the total profit for the total capital now invested is 1,100,000. Now, the profit allocated to the mudaraba capital, let's say he produced a 10,000 profit, then the profit allocated to the mudaraba capital is 1,000. Now, I will say to him that my profit share is 95% to the bank and 5% to you. But the expected profit rate for the bank is 7% or 8% or 10%, whatever it is you want to charge. So you have two things. The profit sharing ratio, which how much we share the profit, and you cap that with what we call the expected profit rate. So the expected profit rate is the actual cost to the client. There will be no more than that. So even if your rate of return on the investment was 20%, because we're charging from the gross profit, yeah? So if his gross profit is, let's say 30%, then the rate of return will be 30% for your money. But we can't charge 30% to the client because then you're actually physically becoming a partner with him. So we cap it at 7 or 8%, as normal as in the market. Now, the difference between the 7% and the 30%, it's still our money, it's still our profit, but I won't take it. I will say to him, keep it with you as a reserve for me. So from the first month, you actually starting accumulating a reserve. So I ask him to pay an advance payment equal to the 7% only, but the rest, which could be actually much, much more than the 7% I'm receiving, he will keep it with the client as a reserve to the bank. In case at any point later, he actually makes a loss or did not achieve the 7%, then I can ask him, can you pay me from that money that actually you hold for me as a reserve? Now, creating this additional reserve is basically creating additional security to the bank, additional cushion that actually you can use when things goes wrong. Now, this type of thinking, which is very simple, very straightforward, it is implemented, it's already regulated for by IOFE, but actually we tried to take it from a normal saving account that is used and try to implement it on the finance side of the client. So you end up with a very good product that is Sharia compliant, commercially viable, and actually add a real value for the businesses now, which they need an Islamic solution for overdraft, which doesn't exist in most of the countries. So this creates a new solution, creates a new idea, brings a new thing to the market. In one of the conferences, actually, I was saying, and I do really believe that this product as an overdraft is less risky than the conventional overdraft, while it is using mudaraba. And of course, some of the scholars were, shouting, how can you say that? How it's less risky than conventional? Yes, it is less risky. If you have a better design product, if you have put better control, if you have used the proper criteria, then you have a better product. It's regardless if you're using mudaraba or not. Mudaraba doesn't mean that we have to lose money. No, mudaraba means that if there is a loss which is unavoidable, then yes, the bank will take that share. But other than that, it's a better product because with this monitoring mechanism, which a conventional bank will not usually do, they will not know unless the client actually goes bust and bankrupts. But we will know before. So we will have a better control. We will have a better risk control than a conventional overdraft. And that's why we believe that this product can actually represent a better solution to the market even than the conventional product. And it's less risky for the bank than a conventional product, while it is more convenient to the client. Because if that's inevitable thing happens, that's actually there is a loss that he cannot avoid, then you as a bank will share that loss with him. You don't leave him on his own. So this is one of the solutions. Sorry. Again, I have to go through this very fast. Now, the second solution we have also designed a supply chain finance. Now again, this supply chain finance solution is very interesting because it's a new thing. It's even in the conventional, it's been for the last maybe 5, 10 years only where banks actually start thinking about, okay, how we can provide a proper solution for the supply chain finance. And there's different things. And when you think about it from an Islamic point of view, there is a lot of issues that you need to consider within the supply chain finance solution. And this is something, again, that we are actually creating now with one of the banks. So the supply chain can be designed either and this is again about SMEs, about small and medium-sized businesses. There's a lot of SMEs that actually provide supply to big corporates. Yeah, so you have major corporates, and these major corporates usually use supplies from medium-sized or small-size company. So every time the major corporate put a tender in the market to provide supplies, you know, these small companies might tender for that or bid for it. And if he gets the contract, then every time there will be a purchase order, and usually these contracts could go for 2 years of supply, 3 years of supply, and the corporate will send a purchase order to the SME. Now the SME will buy the goods, deliver it to the corporate, but the corporate will pay after 3 months or 2 months. So there is an opportunity for finance. And this is what we talked about, the market research. You do the market research to identify where's the gap in the market and to provide a solution. So this is one part, which is supplier finance, we call it, supply chain finance, but you're supplying or you're financing the supply finance side. So an SME providing supplies to a corporate. But there is also another part where the SME is a distributor. So he works as a distributor for a big company. Think about small, car shops, AC distributors, fridge distributors. You have big corporate, manufacturing here in the country, and there's small shops actually who buy this goods. Maybe selling on a retail, fridges, ACs, whatever it is, and these guys, they can actually sometimes want to expand. And sometimes the company actually give them only 30 days of payment. So he gets the supplies and he has to pay 30 days. But sometimes it takes him longer to sell to the retail. So to expand his business, to open a new shop, to increase his capacity, you can actually provide him with a finance. So whether it's a supply side or whether it's a distribution side, you can actually create a specific product for each of them. But of course, the way you design the product will depend about what is the asset, what is involved, whether the client owns the asset or not, whether he's actually bringing it from inside the country or from outside the country. All these variables actually exist, but each of them will have its own solution. And you move on from just normal basic product now to a specialized service, a specialized solution. So we are moving forward with that now. It's no longer just, creating another saving account or another finance account. We are looking for solutions. We have to up, the game, and we have to move forward from the basic product to create solutions that actually needed in the market. And this is one of the solutions that we talked about. So as we said, we can have a supplier finance or a distributor finance. So this type of two products actually can exist, but again, they have variation. Each of these variation will depend about what is exactly involved within the process. The supplier finance, we used a wakala structure, where you actually appoint the client as your agent to go and buy the goods from wherever he wants to buy it and supply it to basically the corporate. So every time he does a transaction, he bring a purchase order, we sign a simple one-page document that actually allow him to do that. You either pay him the money directly into his account, or you actually pay to the supplier of the goods directly into their account, just to add to the security of the transaction if you don't trust your client enough. But then the payment is coming from the corporate. So the corporate will pay for the supplies, and this is where you have a less risk transaction, because you know how much he's buying for that, how much he's selling, and it will become very straightforward, easy wakala transaction. On the distributor side, very much the same. We will buy the good from his supplier and sell it to him on a murabaha basis, but allow him to pay into installments. So this is another solution that we created. Now, on the final one, and this is a very interesting thing that we are working on now, which is create a new liquidity solutions for banks. And this is a product for actually central banks. But it can be developed also for individual use of banks. And now we're talking to this, we're talking to the Central Bank of Oman, we're talking to the Central Bank of Bahrain, we're talking even to Bank of England, who was actually very interested in doing a liquidity product for the Islamic banks in the UK. We're talking to them, and we're talking to the Bank of Maghreb also on this solution. It's a completely new idea that actually brings a solution to the central bank to be able to provide services to the existing Islamic or participation banks. Now, it's a big problem, and we know that the liquidity issue within the banks is a very big problem. And it's not only will affect the banks, it's also affect their capability to actually to move forward and grow. And we know that central banks doesn't actually offer enough products for the banks on the liquidity side. And I'm not sure if anybody can actually help us. What do you have here in Turkey? What type of products you have from the central bank for the participation banks? Do you have an overnight deposit? You can actually do an overnight deposit where you earn profit on it. Anyone knows?
Yes. May I have the microphone, please? Yeah. No, it is yours. There is another microphone somewhere here.
Okay. Well, of course, Islamic banks in Turkey are working with the Central Bank of Turkey very closely in terms of liquidity management. After invention of sukuk issues in Turkey, it was in 2012, as far as I know. So it created a good opportunity for Islamic banks for liquidity management, short-term liquidity management as well. And there are sovereign sukuks and private sukuks, and Central Bank of Turkey is ready to buy it for short term to provide liquidity for Islamic banks. There is another issue, which is precious metal banking, which is gold banking, gold-based banking, okay? In Turkey, Islamic banks and other banks as well, we're collecting gold and silver, gold, let's say, as deposit. But, collecting gold is easy, but utilizing gold is not that easy due to Sharia compliance and, some constraints on it. Then Central Bank of Turkey did a good favor for Islamic banks. They accept gold as legal blockage or, reserves, yeah, instead of Turkish lira and euro and American dollar, etc. Which means instead of blocking dollar and TL to the Central Bank of Turkey, you block their gold, and the equal amount of TL becomes available for utilizing and generating profit. So these are the examples I remember now. There are others as well. The guys from Treasury departments may know.
Thank you very much. Yes. Do you pay on that?
Yes, can be used at 11% can be used. Also, there was the weekly repo.
Yes, just an important question. Do you pay on that? So they charge you interest or they charge you profit?
No, it is different. We give the sukuk as a thing.
Security?
As a collateral. As a collateral.
Yes.
And then we pay the difference through that. It's not an interest, of course. It's not directly an interest. It's different.
Okay. All right. So you have something that actually seems to be a little bit working, but this is part of the things that we actually offering now to the central bank. So we create a central solution. That's one solution can allow the bank to create different products. It's like a platform when you can actually create as much products as you want to serve the banks.
Same time, we need liquidity instruments with the central bank.
Exactly. This is what we want. So the bank on the liquidity absorption, which is basically collecting funds from the market, with this solution, the bank actually can create very much treasury bills, very much a short term, which is a weekly, monthly, instead of actually issuing a sukuk once a year or every 2 years, 3 years. No, we can move on into a simple structure. I can allow the central bank with this structure to issue a weekly treasury bill, which then can be bought and shared between the banks whenever you need it. You don't have to go back. The central bank, dealing with the central bank should be the second type of transaction. The first transaction should be that if you needed cash, you go to the market. You go to your next bank. Whether it's Islamic or conventional, it doesn't matter, because in this scenario, he's buying an asset from you, which is a treasury bill. And this treasury bill will be backed by a sukuk. So you have a sukuk issuance, one sukuk issuance, which actually can deal with the whole structure. So you have a treasury bill there that actually can be issued on a weekly, on a monthly, on a 3 months, 6 months, a year, wherever you want. But it will give you the liquidity you need whenever you need it. So if you have additional liquidity, you invest. If you needed liquidity, you can just sell it in the market or actually sell it back to the central bank. And of course, with this, you have an overnight deposit where you actually can earn profit. So at the end of the day, when you have, let's say, a 10 million lira additional cash in your treasury that hasn't been invested, why you sit it in your account? Why don't you just deposit it there and actually generate profit, make profit? Because these actually usually available for conventional banks. Central banks have it ready for conventional banks, but it doesn't allow it for Islamic. So you're losing on every single day the additional income that you might generate from your cash available at the treasury. So this is very simple. Now, liquidity injection. Now, this is more important because this is basically, it's less profit for you. But if you really need an injection, if you really need a liquidity, then how the central bank will be able to help you without the proper, basically, instrument. So we have an intraday deposit. The central bank can physically just pay you the money for 1 day, and whether they want to charge profit or not, it will be invested into your pool of funds like any other depositor. So he will just get a portion of the profit that you will generate from your pool of funds. So it will become just another depositor and is a straightforward solution. Deposit with a charge over treasury bill and sukuk, and this is very much like what you maybe have now, where the central bank can give you against a security, which is either the treasury bill you have or the sukuk you have, where they take a charge over that. And again, they will earn a profit based on the bank's performance and capped, very much as we were saying now with the overdraft finance on a mudaraba basis or on a wakala basis. They will just make a deposit and take the treasury bill or the sukuk that you have as a security, which means that you actually achieve the same objective of funding. And this is what we call it Islamic repo, or very much like an Islamic repo, because it gives you the same effect, but it's a different process. And it's easy, straightforward when you have the structure in place. Now, the final thing is the discounting of a treasury bill of a sukuk. And again, this is very straightforward. If you have a sukuk and you want to sell it actually, or a treasury bill that you want to sell it, the central bank can just basically buy it from you on a discounted basis, and this is the haircut that you usually charge for every transaction. And then they will hold it, they will hold the treasury bill, all the sukuk, until maturity. So you can either be doing a repo or an Islamic repo for the sukuk or the treasury bill, or you can do a discounting of completely, which then you're actually selling the complete sukuk or the treasury bill to the central bank. So this is very much like at least 5 products here, but there's more products that actually can be developed based on this. As long as you create the infrastructure properly, the central bank will be able to create as much products as they want to serve for the Islamic banks. And it's easy, straightforward, it doesn't require a lot of transaction, and we'll usually use the same existing RTSG system that's actually they have for conventional banks to create something similar to the Islamic funds. So this is it. I think I have been taking over my time. I hope you have enjoyed the discussion, but I'm open for questions if anyone has any specific question on the subject, the product development, the financial engineering, the products that we talked about. You're very welcome. Not interesting at all? No questions?
It was clear.
Alhamdulillah. Please.
Thank you for the nice presentation. Really, it was very beneficial. And I would like to add something rather than asking a question. Since I'm a product developer for 25 years, there is one thing in recent time, since the information is everywhere and you cannot hide any information, anything new, people can learn it immediately and imitate it. So developing new products is becoming more and more marginalized. Marginalized in two ways. One, in terms of Sharia compliance, in terms of profit generation. In terms of Sharia compliance means if you rush yourself and if you are too greedy to develop something new, it means that you're running, at the edge of Sharia, and there is a danger to cross the territory of Sharia. This is one danger. Second one, the profit generated out of newly developed products is very marginal. So the marginal utility or marginal profit is decreasing day by day. So in my opinion, rather than developing new, very marginal products, but you can generate, let's say, a few hundred lira or dollars per year, it is not very important. Instead of doing this, revisiting, re-engineering the existing products, and most importantly, process and procedures, add much more value on the company. Let's say, based on my experience, again, starting from the highly used process and procedures, which is murabaha, let's say, we made a re-engineering project, and out of the re-engineering project, at the end of the day, we saved maybe 100 staff members. Cost reduction, you mean? You cannot generate such a profit, out of newly developed products and services. So for the bottom line profitability, re-engineering, revisiting, redoing everything in processes and procedures and the existing products are more important than developing something very marginal. Do you agree with me?
I totally agree with you. There's two approaches here. One is, which is continuous, is to improve continuously on our existing product, and as we said, you inch a little bit every time. You add a little bit of value, a little time for your existing product, so you improve it, you add a little feature, reduce the cost, improve the process, which is continuous. Should be done on continuous basis. However, the time we are living now is changing very fast. The things are changing completely. And we cannot continue with the existing products only. We have to think about the new products. We have to think about the new generation. Our new customers now, which we call them the millennial, these millennial guys who actually grow up, from the, born in the 80s, 90s, and now they are in starting 2000. And now they are basically on their, they are the bankable generation, and they are the majority in our countries. The young generation up to 35 is actually the biggest chunk of the Muslim population all over the world, and this is the future. And I have to bring them product that actually suit them. Now, yes, it could be a change of the design, a change of the delivery channel. That actually brings a new things to the consumer. So we have to think about the future and how we cope with all these changes. The banking, the fundamentals of banking itself are changing now. Things, you have, this new fintech things coming up, and they're challenging the way the banks operating for the last 400 years. Yeah. Now, I'm not thinking that actually the banks will disappear, because it's more likely that the banks will usually buy out all these fintech solutions, new solutions, and adopt them for the banking solution. But it is changing, and if the bank doesn't change, it's going to be very difficult. More importantly, we still have a lot of room in the Islamic banking. One of the things that I keep thinking about is that in conventional banks, they have only one principle, which is a loan and interest charging. And from that one principle, they actually created hundreds of products. Now we have like 20, 30 Islamic principles that actually we can use in finance. And based on these 20 principles, we have like 10 products. We should have like 300, 400 different products. And I am always open, for thinking, you choose whatever you want to do and try to do it as long as it's Sharia compliant. What we need to think about is how we control the risks. Every time we enter into a new transaction, a new product development, is think about how we can control the risk from that product. And it's open. You have salam, you have murabaha, you have mudaraba, you have musharaka, you have muzara'a, you have musaqa, you have unlimited number of Islamic financial principles that actually can be used, specifically to create specific solutions, which is the second generation of the products. It's no longer just having a saving account and a finance account. You need to think about a complete solution now. We have a lot of agricultures in our country. We have a lot of manufacturing. We have a lot, mashallah, Turkey is a very large country, a very large economy. And you need to think about creating specific solutions now. So you go and see what's exactly the farmer needs, and I create a specific solution for farming. And I create a specific solution for manufacturing. That's actually meet their exact requirement and sell that product for that specific niche market. So you design it for SMEs or for corporate or for whatever it is, you specifically design it for that. And there is a lot, whether it's something with agriculture, with tourism, with, you have a lot of things. You just be specialized now. Move on from the normal thing and try to focus on how I can get a bigger share in the market by being specific to a certain industry. So you create one product for this industry, one product for this industry, one product, and you find yourself actually crashing the market very fast because nobody else actually trying to do that. And this is something which you can actually think of. How can I actually increase my exposure to the market by providing this specific solution that's actually meet an exact need for a certain industry that's actually nobody is fulfilling, at least from the Islamic side. Any other questions? Yes.
Sir, my name is Kerim from Ziraat Participation Bank. I would like to ask you about the business overdraft based on Mudaraba products. Yes. What about the profits? You said there is a profit sharing rate and an expected profit rate, which we talk in advance. But maybe I misunderstood some part. For the loss case or a profit rate below our expected profit rate case for the firm, what is the suggested implementation for the product?
Now, as I said, if you don't have, well, usually if you are on the starting point and you didn't achieve the expected profit rate, then the bank have to accept the lower profit rate. Or if there is a losses, then the bank has to accept that. This is an essential part of the risk of Mudaraba, and we have to accept that. Now, the controls we have, it will not allow us to get there, right? This is the point. This is the point that actually I start with a client whose gross margin is 35. So I will look at his 3 years, previous years, and they have to be on average, let's say 30. I put this in the product definition paper. So a new client should have a minimum of average for the last 3 years of a gross margin of 30%, which means that if I'm charging 10%, I still have 20% of a fall on his profit before actually it hits me. So this is very important, right? So when I get that, then I say, okay, I want to charge an expected profit rate of 10%. And we start the process. So the first month, the second month, he start paying. By the first end of year, and I'm looking at his profitability on a quarterly basis. So I'm monitoring him. So if the first quarter I saw that the 30% gross margin goes to 25, then that's an issue. But if it was going to 15%, then my Excel sheet that we have developed immediately would turn into red and tell the RM that this person or this client has a problem. So he has to go and visit and check what is the problem, why the gross profit margin has dropped from 30% to 15% in 6 months. Then either we decide at that point that there is an issue that he's fixing, or there's a problem with the business, then we stop. And you stop before you actually go to the red. Yeah, exactly. Now, if you think that it's just an issue, for example, sometimes you have seasonal businesses, yeah? It's a normal that at that time they actually sells below the cost or sell, because, some cloth shops, they have a season 70%, 80% discount. Yeah, so it will normalize and then go up, then it's part of the business, so it will continue. So you will not have a problem. Now, by the end of year one, you will get your 10% profit, but you have still 20% of that profit, which can be set as a reserve. So if you pass the first year, then you are secured, and the client wants to continue, then you have a reserve that if anything happens in the next year, then you are actually secured for any losses or anything. We usually request to have up to 20% of the facility as a reserve amount, right? And this is usually will be filled up. Let's say you have 100,000 facility, then you will have a reserve of 20% with the client. Now, this money is only on books with the client, but the client will use it. It's basically a loan to him from the bank, an additional loan from a Sharia point of view. We will record it that it's our money, but it's still with him. So technically, the actual cost for the client will be only the expected profit rate, which is agreed, but only if he make a loss or did not achieve the expected profit rate, we'll use from that. Which means that his cost is going to be only 10%. It's not going to be more than that, whatever. If he decides that he wants to terminate the relationship with the bank, then this reserve will be then given to him as a gift. So at the end of the relationship, if he decides to close the account, then whatever he has as a reserve for the bank, then we'll give it to him as a gift at the end of it. So you don't actually ask him to pay anything unless he did not achieve the expected profit rate or he made a loss. So the total cost for him is only the expected profit rate, which should be in the market, in line with the market, what everybody else charging in the market.
Thank you very much.
Any other questions? Well, thank you very much. Jazakumullah khair. I hope you enjoyed it.